right, what's up traders? Good day, Jay is here. Welcome to this video. In this training I will be doing the market review, and I will also teach an entry pattern or an entry techniques. All right, and first of all, I want to appreciate all of you who has been showing this channel love, who has subscribed, who has joined, who has shared the link one way or the other. I see all of the love, all of the comments, and I especially thank you for this. Now let's do more of this, guys. The only way you can reward me actually is by letting more people know about this channel, especially those who you care about, you want them to trade. Of course, here in this channel we talk about everything trading, the financial market, not just forex but also crypto and derive. So in today's training, in today's meeting or video, I'll be doing a market review quickly, and I will also be teaching a very important entry pattern, as it were. Now if you're just joining, please do well to like, subscribe to this channel. Let's move on. Now in the last video, we did have a market overview, and we tried to explain what we expect the market to do in the next couple of days, weeks, or even months. And we actually did that using the DXY or the dollar indices. Now if you're just joining, please, I recommend you watch that video, because as at the time of this recording, we are seeing all of those things talked about playing out in real time. All right, just a little bit of recap. We expect DXY to be bearish, and thus we expect the foreign currencies like GBP USD to be bullish. Now we are currently looking bullish on GBP USD on the daily time frame. Now I can do this across time frames, the daily, the weekly, or the monthly, but we just want to keep our trading sane, right? So we will be doing just the daily time frame. Now we are looking bullish on GBP USD. How far into the sky are we headed? Now technically I would say we are looking to be bullish up until that level up there. So we have a massive run ahead of us. However, we are going to be having burps along the way. So you see this level up there, expect, if you're buying, if you've been in the trade, you expect to take out some profit along those areas, those very key zones. You must not you can't play blind eyes to them, basically. So we are bullish essentially. To the explanation on how we got here is clearly spelled out in the last video. All right, still on to buttress the point further. Overall, in the weekly time frame, you can see we are bullish. Overall, in the weekly time frame, we are bullish. We have been bullish all year round. Overall, we have been bullish all year round. Now, in spite the bullishness, a lot of things happen. So that is why, even though you are bullish, one of the most important thing about trading, or one of the very important about trading, apart from having your market bias, is your entry, how you enter the market. Now if you ask me, we are bullish up until that level I am marking out. It's called the volume imbalance right there. And in the dollar, we have a level down there in dollar where we expect to fill. I've done a review about that in some of our other videos. So we are going to be bullish up until that level, but on the short term, bullishness will be up to this high, and we'll see some level of consolidation or retracement, and they will take it up to that level. I am seeing this happening all year round between now and the end of the year 2023. Okay, so we've been seeing the pushes, pullback, expansion, pullback, expansion, a little bit of pullback, expansion, a deeper pullback, and then we expect an expansion. It might just expand into that area, taking out that high. So this is the weekly charts from GBP USD. So you should be looking for buying opportunities. Once you're able to determine your trend direction, you should be looking for buying opportunities. Right now, there is something about the market. I'm going to head over to 1 hour chart and show us other things. However, I need to see something very clearly with me, because this is a typical theme every time the market wants to reverse. All right, a sweep of market structure and then a break to the other side. So I will go into the smaller time frame and explain that more carefully so you can see. Look at this low right here. Look at the price. Look at how price came to this level to take out the low. All right, that's not very accurate. I'm not using my trading view, so I'm having issues navigating here, but you can see clearly how price took out that low, or let me reduce it a bit. You can see the lower point, this candle took that low out, and then note the high prior to that low, which is this one. All right, now for those of you who wants a very confirmed entry, this high, once it gets taken out, it's a very confirmed entry, knowing that we are going there. So what we're talking about is, let me go to the 1 hour chart and show you more of that in how that happens. Right now, please do not be caught unawares by all of this noise. Right, up and down movement, all of these are noise. You shouldn't. That's why you want to always do your top down analysis from the higher time frame. Now back to the thoughts I was having before. I was trying to show you how you know a trend is changing. Right, what gives you the very strong guarantee that a trend is changing from bullish to bearish, or from bearish to bullish? Right, there are many indicators, but one of them I like the most that I always look at for is usually a sweep of liquidity to the opposite direction, then a break of structure to the newly intended direction. I'll tell that again. If the trend is to change from bearish to bullish, one of the ways market will do it is that it will sweep liquidity to the current direction, and then reverse to break structure to the opposite and the new intending direction. So what does that mean in chart? So obviously you can see in this short scenario that we were bearish, price has been bearish all this time, and then at this level right there, you can see there was this sweep of liquidity to the downside. Now the high prior to that low that was swept needs to be taken out. So in this case, we're concerned with that high. So this is a low. All right, this is a low, that is a high. Once this low gets taken out, you want to look out if the high of that low will also be taken out, and once that also occurs, then you are very likely seeing or witnessing a change of market direction. So what did we say? You see price swept this low right there all the way down. That is the high that started the low, or that has this low. You can see that high is connected to this low because it has a low, a high, and then it's broke lower. And then price, you want to see if price will rally and take out the high, and once that occurs, you already very high probability that you are now changed direction. So you see price pulled back, expanded, broke that new high that was formed. You are still in a new direction, pulled back. All of these shenanigans is actually a pullback, and then broke structure high. So you want to actually study your market structure. Structure is king. Structure is king. So it kept breaking high. Now note that high is a very important high that would tend to tell us that we are still bullish. And as at the time of recording, by the way, this is Tuesday 22nd of August. Tuesday 22nd of August, we have seen that high broken. And of course, after every expansion, what do you expect? Retracement. So you shouldn't be buying at that level. In as much as you are bullish, you should know when to enter the trade. That's what I started by saying. I said entry is everything. So we have been bullish right from this level, got really confirmed right there, but where are you supposed to enter your trade? Your entry is everything. So you can either use the ALGO structure, which we taught in our 1 hour plus video in this channel, or you can use simple techniques. One of them I'm going to be sharing in the next couple of minutes. So we are bullish and we have all of these structures keep breaking. So where would you actually want to engage a bullish trade? First things first, if you are bullish, we have talked about you want to buy at your discount level. In a bullish trend, you want to buy at discount level. What does that mean? So let's say you have this push right here that broke market structure. Where would I want to take my buy? I will evaluate my range from low to high and take out the 50% level. Now I'm going to give you a caveat. Take out 50% level from the range. Now where did I evaluate my range? Okay, I don't want this video to be so long. Now notice what I'm going to let me do that again. Now this is the push that I am concerned with. This is the push from this low to this high, but I am not evaluating it from low to high. I am looking at the previous structure that was broken. So this high and this low. So that is where I'm going to put my Fibonacci extension and mark at the 50% level. All right, but this is already an established swing. This is a new one. You don't know how far it's going to retrace down to, right? So you are evaluating a current range from the previous one. I hope that makes sense. I will do another for example so you can see that. So you evaluate from low to high right there, low to high right there, and then you put your 50%, you put a line, you mark out the 50% level. Why 50%? 50% of your Fibonacci to refers to equilibrium, so you mark out the equilibrium, knowing that since I am bullish, I want price to come below the equilibrium, which in this context would be called discount, and that's where I'll be buying from. So you see price did all of what it did right there. I am only going to be buying just below the equilibrium. That means my discount. How far inside the discount it will go will be determinant of many factors. One of them includes fair value gaps, the other one order block. So you can see there's the fair value gap right there. This indecision candle is more or less like an order block when you go to smaller time frames. So I'm going to mark all of that area out. So you see how price played inside the range, right inside, and expanded again. Now until this high is broken, we are not confirmed of, we're not sure of our entry yet, and then it broke structure, and ALGO structure played in, and we talked about that in our other video, how that if you have a clean move this way, the low decided to move, expect that low to be taken, and that's like this low was taken out, and that high right now just got taken out. So you wouldn't want to buy at the time of recording. What am I looking out for to engage? I will not be buying there. I will simply evaluate my range just like I did before. Look at it from low, high to low, mark that out, and then put my Fib tool in the 50% level, right, expecting price to pull back to this level. You can see I already marked out structures, liquidity that price will want to take out. So I am looking to either I can sell into this range, which is very likely. I would rather want to be in the side of the trend, and you always want to be inside of the trend, unless, even though you are proficient, you will gain more trading with the trend than trading against the trend. So I'll be looking to add buys here. Is there a fair value gap under? Yes, there is, but most importantly, I'll be adding my buy entries once price gets to this liquidity area. Finally, I'll go to the smaller time frame and show, and of course any buys I will catch or I will get in at this level. You know how far or how long we are going to be riding this move, right? So do not always be looking for new stuffs. Ride your trades till objective is met. So you can see from 15 minutes time frame, we have these levels right here. We expect price to take out, and so we're expecting this drop all the way there. So if you are proficient enough, you can actually look for a sell, but I'll rather wait price gets to my target areas and I'll add my buys. Now let me show us that. And I was talking about break of structures, sweep and break of structure the opposite direction. It happens over and over and over again. Look at this low right here. Look at the low. You see price broke the low, and the high that started the low was there. So price swept the low right there and moved up, took out the high. So this is a change of market direction from a bearish movement. Once this happens, if you are still selling, you should exit your position, because the next thing that will happen, price will most likely pull back to the range. Look at the fair value gap right there, pull back to the range, get itself either a liquidity or a fair value gap, and then it is gone. All right, so you see it pulled back inside the range right there and expanded again. The same thing happened here. This is a low that was swept, and that was the high. Once price took this high out with this move, expect a pull back into the range, in this case to take out liquidity and expands it over and over again. We have this high taking out, and now he's doing what we call trend line. If you watch that video, we talk about what we call the trend line liquidity, where price will be doing like an order flow, right? It is going very slowly yet surely in a direction. Now what does that mean? It is giving people the opium, like we call in crypto balance. It's buy. Then all of a sudden something will stop. It will just break all of these structures, all of this liquidity back to the original low. So my first buy entry will be here in GBP USD. The second entry will be right there. All of my stop loss will just be below this fair value gap right here. You know, there's a fair value gap. You must put that into consideration, and I do not expect price to really come all the way to the fair value, because it's more like a breakaway gap. But you see these entries right there, those are where I'm buying. And if I'm buying there, go to the 4 hour or go to whatever time frame. You can now manage your trades from this level, right? You can manage your trade from this level and hold for the entire run. All right, and of course you know how to take partials along the way. You take some partials right there, take another partials right there, add systematically. So we are going to stop here because this video is already so long, but I just wanted to show that what we are looking at for in GBP USD, you can actually apply the same knowledge in USD JPY. I thought I could pull that out right now, so I summarize. So this is USD JPY, very clean and obedient pair, right? Clean and obedient because it does follow precisely what we talk about now. I actually missed this entry in our last video. One of the videos I talked about how price would, let's go to the 1 hour chart and show you that finally. I talked about how price would most likely, after these expansions, right, this is the same thing you see in what's it called, I was trying to share it with you, GBP USD. You see that's sort of trend line liquidity move, now usually what price will do is to come back, take out all of this trend line back to the original trend line right there. So it did all of this. Now expect the bull movement to come all the way to take that out, which it had done. It did that yesterday, Monday, pulled back, completed the double top, and it's coming down. How far south will it come to? We have a whole lot of room to run into, so you can actually look to stock this pair, right? Look at that swing low, very important. You see the same thing we are seeing here, that price did more like a trend line movement again, so expect the original trend line low to be taken out. So we are seeing that play out, so look for that correlation all the way down here. This is a whole lot to make already, although ultimately we are coming all the way to this bottom, but at least for a more reasonable expectation, if I'm violating from that low all the way to that high, I should be aiming for at least 50% level, which is right there. But however, I'm actually looking at the entire range, so let's be realistic. This is what I'm looking out for. This is the entire range. 50% level is right there, and that is actually our equilibrium of the entire range. So what does that tell me? That tells me that I can actually look to sell all the way down here. So anything below is actually my discount, right? So you can look for sales right there all the way to 50% or below. I hope you understand the stuff. And then on your entry, use any favorite entry models of your choice. There is no hard and fast rule, but if I was going to enter with an algorithm stuff, that would be for another lesson. What can I see quickly? A break of structure just occurred right there, and I like that a lot, expecting that to happen. Break of structure happened right there, so I put a pullback right into the order block. There's no fair value gap here, but there is obviously an order block right at the top, so I'm going to stop right here. Please do well too. Somebody wrote in the last page, GBP AUD. I really don't trade USD pairs other than USD related, so please bear with me, but I would say I can miss in other pairs. But however, I use the knowledge set you are gleaning from all of these videos to implement in your pairs. So I'll stop right here, and I hope you find this video insightful. If you're just viewing for the first time, please do well to show me some love by liking this video, subscribing it, sharing it to your friends, and let's grow the channel together. This is the only way you actually pay and show that you appreciate all that I do, all that we do in the channel. And I will see you in the next video. By the end of the week, we'll review the market as I promised earlier, and then we'll look at opportunities and trades I took, the ones I missed with my SL and taper. Above all, please learn to manage your risk, learn to trade within your risk. Do not risk more than you can afford to lose. Trading is risky. It is not a financial advice, and make the most of the information you have here. I'll see you in the next video. Jay Okoli signing out.